It's common knowledge that we're in the midst of a housing correction, so you should just sit on the sidelines and wait for it all to blow over, right? Wrong. For those that are prepared to take calculated risks, there are rewards waiting for them. Indeed, many of the large corporations that you see around us every single day were founded in hard times, and that's not a coincidence. So how can you invest and profit from the current stage we're in of the market cycle? My name is Phil Wells. I'm a real estate agent serving clients in the Spokane area and North Idaho. I'm one of those rare real estate agents that actually likes working with real estate investors. I like running numbers, I like analyzing deals, and I love the idea of relying on real estate to fund a retirement. In this video, we're going to explore a few things you could do right now to come out ahead in these current market conditions. We're also going to look at a few things you should probably avoid doing right now. So let's get on with the video. Firstly, I wanted to lay the foundation for this video. I wanted to establish where we are right now in the current market. Demand was absolutely rampant up until as recently as the first quarter of this year, when interest rates started to rise to combat inflation. And as the cost of borrowing money made the interest portion of people's monthly mortgage payments more and more expensive, suddenly home prices made less and less sense. So fundamentally, it was higher interest rates that stifled buyer demand. On the supply side of the equation, we had woefully low inventory for the longest time, and it's only risen by a small amount even now. Here in Spokane, we're over a 2-month supply, yes, but it's worth noting that supply is measured at current demand rates, so if demand were even close to what it was this time last year, that 2-month supply would be rapidly consumed in a much shorter time period than just 2 months. So in a nutshell, that is the supply and that is the demand side of the equation, which overall makes up the current market conditions. It's obvious to me, at least, that the weight of the Federal Reserve is what's unbalancing and what's unsettling the market right now. And what's also clear to me is that this can't continue indefinitely, particularly as inflation starts to fall. Fundamentally, we still have a growing population here in the United States, and people still need roofs over their head, and that will be true long beyond when any of us are still alive. So that's the context. On to the first thing you can do to profit from the current market. The first thing you can do is negotiate with sellers. This has simply been impossible the last couple of years. Rather than negotiate with sellers the last couple of years, it's been my job as a real estate agent just to gain the seller's favor. Things like love letters and appraisal gap provisions were common as early as the first quarter of this year. The idea of having a seller make concessions after a low appraisal or a poor inspection were laughable, and the idea of having your seller cover closing costs up front in the offer was just out of the question entirely. Now though, things have changed. You will find it possible to negotiate some closing costs into your offer. You'll find it possible to offer lower than list price. You'll find it possible to gain concessions after a low appraisal or a poor inspection, for example. You can also consider getting your seller to help you with high interest rates right now. For example, you could ask a seller to fund the buy down on a 2-1 mortgage, which effectively means that you'll pay 2% less interest in the first year, 1% less in the second year, and you'll pay market rate in the third year. Meaning that right now it's actually possible to get a mortgage in the first year at least with a 4 handle. Do you think it's likely that you'll be able to refi in the next couple of years while benefiting from lower interest rates in those first couple of years? I think it's certainly probable, and you can sit there waiting for the refinance to come around while you've got a lower mortgage rate that your seller has paid for. Now, I know it's scary to see prices come down, and you certainly don't want prices to continue to come down after you buy. You don't want to catch that falling knife, so to speak. But if your numbers make sense, then your numbers make sense. We already discussed that what's happening in the market right now is largely driven by the boot of the Federal Reserve weighing on buyers. Ask yourself, what is likely to happen to house prices when rates do eventually come back down? We already discussed at the start of this video that I believe buyer demand is still there. It was just stifled by high interest rates, which destroyed people's purchasing power. I work with a lot of investors, and I know that a lot of my clients who are investors like to work backwards to arrive at the purchase price. So, for example, they'll find out what their income is likely to be on the property, they'll find out what their costs are likely to be, and that will inform the purchase price. So now, with your strong negotiating position, is the time to make that purchase price make sense. Now is the time to make great deals that your future self will thank you for. The next thing you can do to benefit from current market conditions is to house hack. House hacking is nearly always a good idea, but right now it's getting more and more favourable for people. I have a separate video on house hacking and I'd encourage you to check it out, but in a nutshell, it involves buying a 1 to 4 unit property, bringing in renters to help cover or substantially cover your housing expense. Real estate prices aren't the only thing that have risen recently, so too have rents. So right now you'll be able to maintain or even raise rents in some circumstances, all while paying less for a property than you would have done at the start of 2022, thereby increasing your margin. Now I know that the interest portion of your mortgage is higher right now than it should be, but if you're able to get a good deal right now and then combine it with a low mortgage rate in the future, then you'll really be setting yourself up with a great long-term investment. I know that a lot of investors talk about the 1% rule, whereby people hope to get 1% of the property's value in gross monthly rents, as a way of determining whether they're getting a good deal. Here in Spokane, that 1% rule hasn't been possible for a while now, but as home prices continue to fall, that margin is looking better and better each day. So if it does suit your lifestyle, and I understand that house hacking has to suit your lifestyle, it's not a perfect solution for everybody, but if it does, then now is the time to consider house hacking. Don't forget too that lenders see 1 to 4 unit properties as residential, so you don't need any special loan types to qualify to buy one of these types of properties. Lenders can also even take into account projected rents towards part of your debt to income ratio, which means you might qualify to buy more real estate than you initially thought possible. Imagine having no housing payment or a really low housing payment of only a couple $100s a month, all because you bought when everybody was scared to jump into the pool that everybody was jumping around and having fun in only a few months ago. Next on the list of things you can do to profit in the current market is to look at new construction. In a state like Washington with strict codes, you would expect the building to be premium, but it doesn't mean the prices have to be premium. Builders build homes to sell them, they don't build them to hold them. And right now, a lot of builders are struggling to sell homes. So it's possible to get great deals on new construction. As an investor or someone interested in investing, you'll know that one of the biggest cash black holes for investors are things like maintenance and capex. Things like a new roof doesn't add to your rental value, but it's important to do to actually maintain that asset. So imagine hedging your exposure to things like new roofs and new heaters by buying new construction where everything's new and for the most part under warranty. It's certainly a great way to start as a real estate investor. The next thing you can do is get creative. You can explore creative options that just haven't been possible for the last few years. How about finding a seller that doesn't have a mortgage and seeing if they will sell or finance a property? How about finding someone with a VA loan against a property and seeing if you can assume that loan? Did you know you don't have to be a veteran to assume a VA loan? And it might be possible to find someone with a VA loan below a 3% rate right now. Because the mortgage has already been established, it doesn't need to be re-established at current mortgage rates. If you can think it, there are creative options out there to allow you to purchase properties. And now is a great time to be implementing some of those plans and ideas. I would think about doing some of these things though before traditional mortgage rates come back down and traditional buyers get back in the driving seat. Now I wanted to look at a couple of things that you probably might want to steer clear of and why I think you should steer clear of them too. In terms of flipping, I'd advise that people don't get into this unless they're experienced right now. Inflation is still high, workers are still hard to come by, well, the good ones anyway, and home prices are dropping. You could watch your entire margin for the project disappear in the time it takes you to renovate the project itself. If you're using high interest short-term loans like most flippers do, then that can put you in some serious financial hot water, and I don't want that for you. That said, now might be a great time to do a live-in flip, for example. You buy the ugliest house on the best street and fix it up for the next couple of years. You might end up living in a less desirable property than you'd like for the next couple of years, but by the time the market recovers, remember you'll be in a premium area and you'll have a much better, more valuable property to put it on the market if that's what you choose to do. Next on things I don't recommend doing right now in the current market is getting into short-term rentals. Unless, like with flipping, you're experienced and you know what you're doing. Have you ever been on a website like Airbnb and typed in Spokane? It's a completely saturated market with people differentiated by only a few dollars a night. It's actually getting harder and harder to break into the short-term rental space as well, as websites are beginning to change their algorithms to favor hosts with much higher reviews. The last thing you want is a vacant property that you have to pay a high mortgage on. In my view at least, in a difficult market like we're in now, stick to the certainty of long-term rentals. And the last thing I wanted to discuss is stop trying to time the market. As you can imagine, I talk to hundreds of people every year, and the majority of people are open to ideas and are naturally inquisitive. It always amazes me though when I come across that one individual that thinks they have it all figured out, and they're prepared to bet the farm on it. They read one article 6 months ago and they believe that they shouldn't buy real estate until 2026. As you can imagine, I have to resist the urge to ask them for next week's lottery numbers. No one knows what's going to happen in the real estate market between now and 2026. And if they claim to know what's going to happen, they're lying to you or they're trying to sell you something. Real estate pays off in the long term. That's just a fact. That's been true for nearly everybody that's bought real estate. It's not a get-rich-quick scheme. It's a get-rich-for-sure scheme. If you have someone else paying off your mortgage for you by way of rental income, and that property is cash flowing or is at least cost neutral from day one, then that property will make you wealthy. Like I said in a previous section, if your numbers make sense, your numbers make sense. Consider this: if you don't buy because the market is too high, and you don't buy when the market drops because you think it might drop more, and then you don't buy when it's at the bottom because there's too much competition and you can't get your offer accepted, then you won't buy again when they're at the top of the market and you'll have missed your opportunity to buy entirely. Lastly, if you're sat in cash right now and that 3% savings rate is looking great for you and you're thinking that this is a place you're just going to hang out, then please consider that you can get a great deal on real estate right now that would pay you much more than that interest rate. Cash makes you strong as a buyer, and right now we have sellers willing to part with tens of thousands of dollars to help lower people's mortgage rates by way of a buy down. How willing will they be to you as a cash buyer to simply sell the property for less money? The answer is very willing. So if you do have cash right now, there are some serious discounts to be had in the real estate market. Now is the time people claim to have been waiting for, where they're able to get great discounts on real estate. Ask yourself, is the interest you'll be earning on that cash more than the tens of thousands of dollars in discount you'll be able to get on a piece of real estate in today's market? That's it for this video. People who own real estate have always been the wealthier group in society versus those that don't own real estate. And it's also true that those that take calculated risks in downturns tend to come out of that downturn in a stronger position than when they went in. So do yourself a favor and bag yourself a great investment while real estate is on sale. Remember, rates will come back down. And when rates do come back down, you'll be combining a discounted purchase price with a great rate on a mortgage and setting yourself up for long-term success. Like I said, my name is Phil Wells. If you're looking at buying or selling real estate in the Spokane area or North Idaho, then please reach out to me. Give me a call, shoot me a text, send me an email, or send me direct messages on my Instagram or Facebook page. Until the next video, thank you for watching.